Good morning, traders. This is a live trade recap. I took two trades this morning right at the market open. It was a very interesting day. Something very unusual happened today, and I'll give you a hint right now. Both of the trades went to 2R, so they both hit my profit target. I came away with a 4R day, which is great because yesterday, if you watch my live trade recap, you know that I took three trades and they all failed. So I ended up with a minus 3R day yesterday. I'm up 4R today. So I'm up 1 times my risk overall. So it's a great thing. But let's clear a few things up. You could see that my P&L for the day looks red. That's because of the SPXL trade, swing trade. SPXL is pulling back. I'm still in the green. I can't lose that trade. I'll show you that in just a second. But just to show you, without a doubt, that my day trades, which are just test trades, one single share test trades, went to 2R and we're green. They're right here, Macy's and U.S. Steel. And then you could see the red on the chart or on my account page here is all because of the SPXL swing trade. Let me just show you that trade really quickly so you know that I'm not red on the trade. It's just a red day because the price is moving lower than it was yesterday. That's all. So you can see my stop is well above. It's in line with the 50 MA. Actually can move it up 1 more cent. It's well above my position, so I cannot lose on this trade no matter what happens from here on out. I'm going to be in the green. I'll go over this trade specifically in another video that I'll release this weekend. So let's take a look at the screener and I'll show you how I pick my stocks to day trade. So I always use my mid-cap screener here. Click on my screener, hit the 3 dots, click modify. That's really important. Otherwise your filters will not be applied. Why do I trade mid-cap stocks? Because they're lower risk. Obviously that means they're going to be lower reward as well. They seem to honor the chart patterns much more definitively than the small cap low float stocks. So if I trade these exact same setups on the small cap low float stocks, my win rate is automatically lower. So that's why I trade these mid cap stocks, because I just don't think that I'm going to be profitable in the long run, or I'll just be so close to break even that it's just a little bit scary to be trading those low float small cap stocks long term. So I organize the list by volume. And then I just stay on the first page because that means I'm going to be trading the stocks with the highest volume. That's always a good thing. You want liquidity, and volume can move the price in the direction that it's already moving much more easily than a low volume stock. So then I just look for the stocks that are green. They must be 2% or higher in their percent change. And that's about it, really. So on the daily chart, they must be above the 200 MA. So like TAL, for example, it meets my screener criteria, but it does not pass my chart criteria. And we'll show you that in the video right now. So here you can see, this is just after the open. I've got Macy's up on the chart. This is the daily chart. So you can see here's the 200 MA. That's this red line. It's trading above that. So it passes my chart criteria. I can look for a trade if it breaks over its previous day high. We'll get to that. TAL, you can see, is trading below the 200 MA. So it doesn't matter what it's doing. It doesn't matter how much percent change it has or anything. I cannot look for a trade because it's in an overall downtrend, and I don't want to trade against the trend because that puts the probability against me. Even if it did give a 2R trade that day, I don't want to take that added risk. It's hard enough when you do everything right to stay green. So now on Macy's, I have to mark out the previous day high or the previous session. Let's see. Here's where I'd get that. So this is the previous day high. It's kind of hidden back here. It's 1720. I mark that out on the chart. The price must break above that level in order for me to even look for a trade, because that signifies strength. If it can break out above its previous day high, that means there's a lot of buying interest in the stock. There's volume coming in, pushing the price up, and it's more likely to continue in that direction. That's why that's one of my criteria. It doesn't always work. That's why I use a stop loss. So here I'm putting U.S. Steel on the chart. And it has the same thing going on. It's trading above the 200 MA on the daily chart. And this is the daily chart, so you can see the previous day high. Now this is where the interesting thing that I talked about at the beginning started to take place. So these are both the daily charts. If you look at U.S. Steel, it looks very extended in the past, I don't know, what is that, 6-7 days, something like that, maybe 8 days. It's very extended on the daily chart. although there is room for it to go higher. If you go back over here, you could see there's a lot of space for it to go higher. That could also be resistance to keep it from going higher. So this one was a really tough one to judge. Macy's versus U.S. Steel, which one looked better on the daily chart? I thought that Macy's had more potential of giving a 2-hour trade based on the daily chart, just because it's in an overall uptrend, but in the recent days it's in a downtrend. So it may be more likely to give me a 2-hour trade if it breaks out over that previous high. But U.S. Steel also looked very strong, so I really couldn't decide. And you could see on their 1-minute charts, they're both making very strong runs up to the previous high. So looking at these two charts, I just could not decide which one did I want to enter in more. If I had to put money down on it, if someone was holding a gun to my head, I would say that Macy's was more likely to go to 2R, but it was really a toss-up for me. So I decided, let me enter both of these stocks, and that should give me a little bit of an edge on getting a 2-hour trade because they both look strong. So if one of them fails, maybe the other one works out. And then my other plan was if U.S. Steel failed, then I would reserve my third trade for Macy's, since Macy's looked the strongest. Luckily, I didn't have to do that. So let's take a look at what happened here. Let me fast forward a little bit. So there's where U.S. Steel broke out above its previous high, and it wasn't just a little peekaboo breakout. It really showed some strong buying power there. I mean, that's a really strong move. So even though this one looked overextended on the daily chart, it's pretty hard to ignore what's going on here on the 1-minute chart. You expect to pull back after it breaks out through a previous high. And that's my criteria to look for an entry, is once it gives a pullback, then I wait for a 1-minute candle to make a new high. You can see Macy's now broke out over its previous high, again by a pretty decent amount, not just 1 cent. So they both have triggered me to look for an entry at this point. So now I'm just waiting for a 1-minute candle to make a new high. Whichever one does it first, I'm going to enter in, and then I'm going to look for the entry on the next stock. So you can see right there on U.S. Steel, it's back up just a little bit. The high of this candle, I believe, was 2603. So I'm looking for 2604 or better. It's going to happen right now, or right here. Yep. Now, there's something I want to point out, because this could really mess you up if you're trying to trade like this, is I was thinking that Macy's was going to give me the entry first. So you can see I have my cursor here, and I also clicked inside of this chart. You can see this blue line around the chart. That means that whatever I do with my hotkeys is going to happen to Macy's. So just through experience, I'm aware of that, and I know that if U.S. Steel triggers first, then I'm going to have to go back over here, click on the chart before I trigger my hotkeys. So that's something to be very careful of, because otherwise you might enter into the wrong stock. So you can see I had this highlighted because I thought Macy's was going to give me the first entry, but then I come down, I bring my cursor down, and I click. You'll notice that the blue highlight moves to U.S. Steel because I clicked on that chart, and I triggered my hotkeys like almost instantaneously as I did that, so that I got in and got the best fill possible, and actually got filled 1 cent lower than my ideal entry, which is fine. It lowers the risk a little bit. It also lowers the reward. So once I'm in the trade, my very first priority is always to move my stop up to the low of the previous candle. That way, if it's a fake breakout and it flushes down against me, I don't have to take any bigger loss than I need to. So now I have some time to use my 2R calculator. You can download this from the Facebook trading group by the same name, Trading Armor. It's very convenient because there's a lot going on right now. I'm trying to keep an eye on Macy's and look for the entry there, but I'm also trying to get my 2R target in place. So if I was doing the calculations in my head, I might miss the entry on Macy's, or I may screw up the calculation because I'm looking for the entry on Macy's. So that's the beauty of the 2R calculator. Sometimes I do just do it in my head, and then I can go back as soon as I get a chance to the 2R calculator, punch in the numbers, make sure everything is right. So it's really nice to have. And now, again, just waiting for the entry on Macy's. My U.S. Steel trade is all set to go. I don't have to worry about it. So here on Macy's, the high of this candle, let me see. Let me just back it up a little bit. Okay, the high of this candle is 1720, so I'm watching the price bubble. I want to see 1721 or better. And there you could see it. It didn't even give me 1721 up. It jumped right up to 1723 because there's a lot of buyers there waiting to take that same entry. And that's a good thing because you want to get in the trade with other buyers. And this is why you have to have an offset on your hotkeys, because if I had my offset to 0, or if I was trading Thinkorswim, which doesn't even have an offset, then I'm probably not going to get filled even if I buy the ask. Because if I triggered my hotkeys when the price was even 1723, but I have no offset, and the price hit 1724 before I get filled, guess what? I get passed up, I don't get filled. So that's essential to have the offset in your hotkeys. I have mine set to plus 10 cents. That seems to work out the best on these mid-cap stocks. I never get 10 cents slippage. You can see here I only got 1 cent on this one. So, I mean, I guess 3 cents based on my ideal entry, but 1 cent based on where the price was when I triggered my hotkeys. So that's plenty good. So let's move along here. So here I'm just reducing the number of charts so that things look better on video, and I'm not worried about checking out other stocks or anything like that. Just focus on these. Again, the plan was if either of these trades failed, I was going to use my third trade on Macy's because I thought Macy's looked a little bit better on the daily chart. But again, that's subjective, and I try to use as little subjectivity as possible. So then all of that is based on my statistics and probability, the data that I've collected. I know that my third trade is more likely to work out, so I want to use it on the chart that I think looks a little better. Does it really look better, or is it going to make a difference? Who knows? But luckily, in this case, I didn't have to even bother with that. But you have to be willing to accept the worst case scenario and that decision, because obviously this trade, the U.S. Steel trade, could have failed. I could have taken my third trade on Macy's, and that one also could have failed, and I could have had another minus 3-hour day. I took all of that into consideration when I decided to make that choice, and I was okay with it. So you have to keep in mind, when things work out, you think, I did the right thing, I made great choices, but you always have to think of the flip side. What if everything went against you and everything blew up in your face? How are you going to feel about those choices that you made? And I already went through that scenario. That's the beauty of having some experience trading, is I already went through that. Okay, what happens if none of it works out? Am I okay with that? Yes. And that was my answer. And there was no question in my mind that was the right thing to do. So that's why I did it. And you could see that both of these stocks are going toward my profit target, but there's still an interesting thing that happens here. So Macy's hits my profit target. U.S. Steel looks like it's going toward my profit target. Let's fast forward a little bit. So close. 26.48 starts to turn against me. In the past, in the old days, I would have pulled that target down, and I probably would have taken 10 cents slippage on the way down, which would have turned that 2-hour trade into probably a 1-hour, or let's see, probably about maybe a 1.5-hour, 1.4-hour, something like that. But I decided to stick to the plan and just either let it hit my 2-hour profit target or stop me out at minus 1 hour. I did contemplate, because this is a unique situation I have not been in before, being in two trades that are winning. The first trade has won already, and now the second trade is pulling back. I did consider raising my stop up to break even, but that was not in my plan at this point. So I just let things play out as they were. But I have added something to my plan since I finished trading today, and I'll go over all of that in a video coming out this weekend about my day trading plan and the changes that I make and the results so far on this test trading. So watch out for that, and you can find out what I'm talking about there. So let's just keep on going. So at this point, and I'm just going back in the chart looking to see what this thing has done in the past. But at this point, there's two things that could happen on this U.S. steel trade. Either it hits my profit target or it hits my stop loss. In either case, I'm done trading for the day because I've already had a 2-hour trade and I don't want to give back any profit. So if I would have got stopped out here, I still would have ended the day green. I would have been up 1 times my risk. I would have had a 50% win rate. Still would have been a good day. So that's worst case scenario at this point. And obviously it hit my profit target. So of course I'm glad that I stuck to the plan, stuck to my guns, come away with 4R profit target or profit on the day and 4 times my risk. So pretty good outcome here. Again, it's easy to say, oh wow, I made such great choices when both of the trades work out, but you have to always consider, well, what happens if everything failed, if everything blew up in your face? Then I would have been down 3R today, which is also well within the parameters of my plan. So, but just it's always a good thing when your plan kind of aligns with the market and things work out in your favor. So that's what happened today. Let's take a quick look at the spreadsheet. I'm going to go over just the win rate stuff and show you the data on the trades. So we're 55 trades now into this test trading. That was trade 53 and 4. Sorry, 54 and 5. Sorry about that. Okay, so right here's the trade on U.S. Steel. There's all the data. And then the trade for Macy's right there is all the data. And if you look at the top here, you can kind of see what that data is. So the average of all of my days, trading days, the average win rate is 53.13. 33% is break even. But much more accurate than that number is just taking the total number of trades, which is 55, and the total number of winning trades and dividing those two numbers. And I get a basically 42% win rate. Again, very well above the 33% break-even win rate. You could see that right now we're up 14 times our risk on this plan. And you could see the return on each trade. So the first trade is up 6 times the risk. The second trade is up 7 times, and the third trade is up 6 times. And the reason why, if you add those up, that's a bigger number than 14. That's because this includes the very beginning where I was taking more than 3 trades, and those were all losing trades. The win rate without errors, 50%, and then the average of those two numbers. So this is a reflection of kind of the plan from day one. Like if I would have traded it perfectly with no mistakes, the win rate would be 50%. And then the average of those two numbers gives you an idea of maybe how my trading will be in time with experience and improvements and all that kind of stuff. The win rate, if I've only taken 3 trades from the very beginning, is about 47%. And then these are the win rates of each of my trades just as they happen during the day. So trade number 1 is basically 42%, trade 2 47%, trade 3 55%. So this is a good argument as to why do I take 3 trades and not stop at 1 or stop at 2, because my third trade is the most likely to work out. So even if I lose the first 2 trades, I have a pretty high likelihood, higher than not, of winning my third trade and making myself break even on the day. So that's why I take that trade. Now, a couple other things I want to look at. I'm going to go over all of these kind of questions that I have on the spreadsheet this weekend. Not today, but I just want to add, oh, you know what? I didn't even update this yet, so I'm not going to be able to go over this with you. I updated all of these things and didn't update this, but basically, this is going to be 14R. This is all of the trades we've taken so far. We would be up 14R, and then if I've only taken 3 trades so far, we would be up 19R, I believe. Let's see. No, I'm sorry. Is that right? Yes, 19R. So if I had only taken 3 trades from the very beginning of this trading plan, I would be up 19 times my risk at this point. If you are risking $100, you would be $190 in profit. Or if you're risking $1,000, you'd be $1,900 in profit. So you get the idea there. And we've only been trading this a little over a month now, since June 17th. Today is July 30th. So anyway, hopefully this was helpful to you. If it was, hit the like button. If you haven't, subscribe to the channel. Then, as always, make sure whatever trade you're going into, whether it be a day trade, a swing trade, an options trade, a long-term investment, you need to have a plan. You got to stick to that plan. You should be coming up with that plan. Don't use anyone else's plan or strategy. then always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.